I think ultimately Bitcoin will serve as digital gold because its fundamental characteristics fit that environment. And I think it'll do just fine. It just suffered from, it had a negative 4-year cycle effect. At the same time, gold had this self-custody for central banks bull market. And so it looks bad on the chart. Over time, we'll catch right back up. Right? If you're going after the gold market and Bitcoin is 6% of it, it's really easy to argue it should be 25. If it's 25, it's $1 million a coin in a decade. Like it's super easy. So I think Bitcoin largely escapes from the revenue meta.
According to Matt Hougan, we are still in a crypto winter. The shock event earlier in the cycle may have felt cathartic, but it likely was not the final bottom. Instead, we are in what he describes as a bottoming phase, a period historically marked by volatility, shakeouts, and false dawns before a durable recovery takes hold. Crypto winters rarely end cleanly. They tend to exhaust participants through attrition rather than deliver a single dramatic capitulation. There are often 1 or 2 additional dislocations before sentiment fully resets. October stands out as an obvious psychological marker, given that Bitcoin peaked around that time frame and has since declined roughly 50%. But the true onset of this winter may not align neatly with that chart peak. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
Unfortunately, I think we're still in a crypto winter. The 2.5 event was shocking, but I'm not sure it was the final cathartic bottom. I think we're in a bottoming phase. Look, I think we're going to get out of it this year, but we're still in the depths of it. There are often 1 or 2 big shakeouts, so I wouldn't be shocked to see another event like that at some point in the future. October is the obvious one, right? Because that's when Bitcoin itself peaked. And you had 1010 and it's down 50% since then. So the easy way to say when the winter started is to point to that. But if you look at the underlying data, there's a funny thing that's happening, which is outside of Bitcoin and ETH, really, everything else in crypto got crushed, basically starting with the Trump inauguration in January. So big L1s like Sui and Aptos and Avalanche were down 70% plus in 2025. And if you plot them on the chart, they started going down in January and they just went straight down. And if you remember back in the summer or early fall of 2025, we all talked about this weird dichotomy in crypto, how institutional investors were really bullish, but crypto retail was really bearish. And you had fear and greed already at low levels. It then fell to the lowest time ever. And I think what was happening was there was a crypto winter for retail OG crypto investors. And then institutions were bullish and they were papering that over in the assets that they could get exposure to. They were papering it over in Bitcoin, papering it over in ETH. And so I think the crypto retail winter started in January and we're well into that, right? We're about as long as those winters typically go. I think institutions just sort of caught on in October and they're moving at a different cycle. They're almost like 2 seasons. And I suspect crypto retail gets out of it soon. I think there are even some green shoots suggesting that may be happening. And I think institutions hopefully figure that out. But yeah, I think we could be out of this in Q2 or over the summer. I wouldn't be surprised to see the winter end on that kind of time frame. Well, there are lots of implications for that. Like, one is that crypto should be less volatile than it was in the past and should have shorter or smaller drawdowns than it did in the past, right? So not 75, 80%, but maybe 50, 55, 60%, which would suggest we're nearer to the bottom. That's because you'll have some people buying while some people are selling, right? And the same thing was true last year, right? Absent the institutional flows, I think Bitcoin would not have been -6, it would have been -60. So already we compressed that volatility, and I think that will continue. So lower, less volatile assets. It also means there'll be this on the run, off the run phenomenon, where assets that institutions are investing into will perform differently than assets that they're not. So what's a good example of that? Over the last week or so, we've seen BlackRock invest in Uniswap. We've seen Apollo invest in Morpho. I've seen more interest in DeFi from my institutional clients. Could it be that DeFi leads us out of this winter because it's getting that institutional flow and institutional interest? I think you might see that sort of dynamic as well. So keeping in your mind this sort of two-part structure, I think is probably going to be important to thinking about how crypto performs, broadly over the next, well, I guess forever, right? This is the new reality we're in. I would say that the issue with what you're pointing out was it actually wasn't a debasement trade. It got positioned as a debasement trade, but what it was a central bank self-custody phase that turned into momentum market. So in other words, what drove the price of gold up was actually central bank buying. It jumped up after the Russia-Ukraine invasion when the US seized Russia's treasury assets. And all of a sudden, central banks needed a way to gain exposure to the market outside of fiat currencies. They started buying gold. They persisted buying gold in 22, 23, 24, and eventually they exhausted supply and the price skyrocketed to the moon. But I don't think it was a debasement trade. I don't think people suddenly started freaking out about debasement. Debasement is sort of a boil the frog phenomenon. Incrementally, people get more worried about that. And incrementally, they gain exposure to hedges. And I think that's still happening. And I think Bitcoin is catching that bit, right? We're still up substantially since COVID. We're up substantially over the last 3 years. I think that's intact. I think what caught people by surprise is they have like one vision of what can drive the gold market and everything should follow along. And in this case, it was just a force that didn't apply to Bitcoin, right? Central banks are not buying Bitcoin. We want them to, but they're not. So I don't think it was a debasement trade. I think ultimately Bitcoin will serve as digital gold because its fundamental characteristics fit that environment. And I think it'll do just fine. It just suffered from, it had a negative 4-year cycle effect. At the same time, gold had this self-custody for central banks bull market. And so it looks bad on the chart. Over time, we'll catch right back up. Well, it's soon on a central bank scale. The issue is that central banks move on a glacial time frame. So when I think all investors are going to buy Bitcoin. And all the evidence I see suggests that I'm right? Originally, it was cypherpunks, and then it expanded to retail, and then it was family offices, and then it was financial advisors, and now you're seeing some endowments, and now you're seeing some sovereign wealth funds. Bitwise did, I think, 4 meetings with central banks last year to talk about Bitcoin. So I think they are coming. The issue is that they just move extraordinarily slowly, right? Everyone moves on their own time frame. Maybe not surprisingly, a central bank moves slower than your degen friends. And so I think we just have to sort of expect this to happen. What time frame will it happen on? It'll happen over the next 20 years. So this is not a near-term phenomenon. If you're wondering what pulls us out of this bear market, it's not the Fed deciding to put 20% of its balance sheet in Bitcoin. That would be nice. You might see 1 or 2 central banks somewhere around the world start to allocate in a small experimental way. For sure that could happen, but this is not going to be the big driver.
Will central banks eventually buy Bitcoin? Hougan believes yes, but slowly. Adoption historically flows outward from the periphery. Cypherpunks, retail investors, family offices, financial advisors, endowments, sovereign wealth funds. Bitwise has already held discussions with central banks about Bitcoin exposure. But central banks move on a glacial timeline measured in decades, not quarters.
So there's some things that are unequivocally untrue. So like the paper Bitcoin thesis is just mathematically untrue. The idea that like BlackRock or someone is manipulating the price of Bitcoin is unequivocally untrue. But then there are things that are probably true. In fact, there are things that we know are true, right? So in 1010, we know of a few small crypto hedge funds that had to cease operations and unwind. They were tiny, but I know who they are. It's not like private information. And if a few small crypto hedge funds had to unwind, it's very possible that a few larger crypto hedge funds are still unwinding. It's very possible that some macro hedge funds are still unwinding. It's possible that there's more than just block fills, which ran into issues and had to freeze withdrawals. All of that is true. The thing to consider when I say that is that's like, maybe it's 10% of the driver of what's happening in the market. it's not 100%. So the problem with these conspiracy theories is like people say it's an unwind by a hedge fund. No, it's that OGs are selling. It's that people are afraid of Kevin Warsh. It's quantum risk. It's all of these factors. This definitely has happened, but it only explains a little bit of it. And then the other stuff like paper Bitcoin or gross manipulation by large financial services companies, that is just a dark place where investors go to die because those things are just untrue. Point and period. But this hedge fund unwind is true. It's just not the only driver of what's happening in the market. From my perspective, Bitcoin has this unique escape from the revenue meta because it's positioned as a store of value. And that's why you see, to get into the community arguments, that's why you see Ethereum wanting to be a store of value, because even though it's the leading platform for stablecoins and tokenization, which is an incredible competitive position, even though it is the leader there, it likes to position itself as the follower in store of value. It's very weird to me, but the reason for that is that store of value has such an easier valuation thesis, right? If you're going after the gold market and Bitcoin is 6% of it, it's really easy to argue it should be 25. If it's 25, it's $1 million a coin in a decade. It's super easy. So I think Bitcoin largely escapes from the revenue meta, whereas everything else needs to align with revenue. I think it's a bigger deal for them, but it's very possible that the concept of Bitcoin's security budget becomes a really big deal in the same way that quantum became a really big deal, right? People were mumbling about quantum a few years ago, and now it's pressing and urgent. People have been mumbling about Bitcoin's security budget and the lack of activity and the lack of fees and the lack of revenue for a while. It would be easy to see that become a big deal, particularly as, to sort of implicate myself, ETFs become effectively a layer 2 for Bitcoin that sucks transaction activity off chain. Right, I could see this become a thing. So that's where I think Bitcoin should think about revenue, is to avoid like a quantum repeat on security budget. And I think that's a legitimate concern that could bubble up at some point. So the other narrative, which I always describe to institutional investors as sort of a slightly out of the money call option, is that we're moving into a multipolar world where people are weaponizing their currencies. It's easy to imagine that in that world, in 5 years, in 10 years, maybe in 3 years, a portion of the world will want a apolitical currency to settle transactions in. And we've seen sort of small efforts at this, right, between like Russia and China and others. I think that that is a major use case. So a lot of people are like, when am I going to buy coffee with Bitcoin? Basically never, at least in the US, because the tax treatment sucks and existing payment rails are super easy. But will the world, in a real multipolar world, want a non-political currency to settle transactions? I don't think that's far-fetched. It's certainly not far-fetched if you imagine yourself going back 10 years in time to 2016 in Bitcoin and asking yourself, will the Harvard Endowment and the Abu Dhabi Sovereign Wealth Fund have large positions in Bitcoin? That seemed absurd. It actually seems easier for me to go 10 years forward and imagine the world settling a significant number of transactions in an apolitical currency. And Bitcoin is the only one that you can do that, because unlike gold, you retain custody of Bitcoin through settlement. And that's like a huge differentiating factor. So yeah, I think that's the second real narrative to me for Bitcoin. There may be others, but those are sort of like store of value, apolitical currency for international transactions seem the obvious ones to me. I do think Trump naming him was bearish for the market, but I don't think the market has it exactly right. So the reason I think it was bearish for the market is that Trump was choosing between Kevin Hassett and Kevin Warsh, right? The two Kevins. And between the two Kevins, Warsh is more hawkish. He wants to shrink the balance sheet. He's not quite as rah-rah. He's more maybe sort of measured and serious, all of those things, right? He's maybe more normal, and Hassett was on the outside. And because it was like a 50-50 toss-up, the market was pricing in a 50% chance that we got a very aggressive Fed chair and a 50% chance that we got a more hawkish Fed chair. And it collapsed to the more hawkish version, and that delta was why it was a negative. At this point, I think the market is wrong about Warsh. I think he's going to aggressively cut rates, and then I think he's going to struggle to shrink the balance sheet that much because there's sort of this element of fiscal dominance where he won't be able to. So my guess is he's going to cut rates more than people expect. And as the market realizes that now, that's going to be a bullish catalyst for the market. So I think him coming into the chairmanship or being confirmed is actually going to be one of those factors that starts to pull us out. But look, it was a fair reaction given that we had the possibility of a very aggressive Fed chair, which would have sent Bitcoin much higher. And we didn't get that. So I think that's what the market priced in. But again, right now, it's going to be a bullish catalyst because he's more dovish than people think.
Crypto winter is not over, but it is different. Retail entered first. Institutions followed later. Volatility is compressed but persistent. Dispersion between institutional and non-institutional assets will define the next phase. Gold's divergence was structural, not existential. Central banks will come, but slowly. Hedge fund unwinds matter, but they are not conspiracies.